Activist investor Nelson Peltz has sold his entire stake in Disney. A person familiar with the matter telling CNBC. Scott Wapner reported yesterday that the selling price was roughly $120 per share, netting Peltz about $1 billion. The stock now, you can see there, just about $100. The move coming just weeks after Peltz lost a proxy fight with Disney. For his insights on this story and more, I want to bring in Rich Greenfield, LightShed Partners. So, Rich, is Nelson gone? Gone for good? What do you think?
Look, I don't know. I think at the end of the day, the media industry is facing a lot of challenges. And, you know, this is not just affecting Disney. I mean, look, I think Disney specifically, I think there's building fear about the theme park business. And I think if you look at why most investors own Disney now, it's because they viewed it as, 50, 60% of the enterprise value. They saw it as coming from theme parks. Like nobody was buying this for ESPN. No one's really buying it for Disney Plus. They were buying it because they saw the stability of the theme park business. And I think economic fears, you've seen a lot of companies cutting price. You've seen some of the travel related companies like airlines, like there is just fear, not that there's a collapse, but that there's a slowdown. And I think that fear is infecting Disney and making it hard for the stock to surge, in this environment, especially when you overlay the larger media meltdown that you're seeing affect WBD, right, Paramount, et cetera. Everywhere you look, there's pressure.
Here's just a shareholder question. I got a bunch of emails this morning when we were talking about this Nelson Peltz story. They said, how is it possible that Nelson Peltz walked us into this, told us all about how great Disney was? It sounded like he was staying in the stock, and then he got out before all of us knew, and we didn't get out when he got out. What do you think of that?
You'd have to talk to Nelson himself. I'm sure he'll tell you. But at the end of the day, look, the media industry is facing a real challenge, right? I mean, how you convert from linear TV to streaming, look, Andrew, Peacock, all of these platforms. This is not easy. And, if you look at what Netflix has accomplished, replicating it is not easy. And you look at sort of the world of sports, Disney's made a decision to be aggressive in sports. They didn't have to, right? They didn't have to spend $2.8 billion on NBA rights.
Where are you now on Warner Brothers Discovery? At this price, do you say to yourself, it's a falling knife and let it keep falling? Do you say, this is a fabulous value? What are you thinking?
Look, David Zaslav, I think it's pretty clear, Andrew, that WBD is going to lose the NBA rights. I don't think they're even trying anymore. I don't think they're going to match NBC. I think NBC is going to have Sunday night game of the week. And so the question's going to be, can Zaslav and the WBD team keep distribution of the Turner networks without the NBA? Is a couple of college football games up against the NFL, is that enough? And look, they have March Madness. If he can keep distribution at a reasonable fee, losing the NBA is actually mathematically positive for the company. If they get dropped over the next 5 years by any major distributor, meaning Charter, Comcast, DirecTV, Dish, then not renewing with the NBA was a catastrophic mistake. We're not going to know today. He's betting that he's got enough other content to not get dropped.
Right.
It's a big bet. And I think that's what investors in the near term, Andrew, whether or not that bet works out well, I think investors in the short term are going to be nervous, and that's going to put pressure on the stock.